Hello traders, how you doing today? I hope you're doing all right. Welcome back to our channel. Thank you so much for clicking. Please, if this is your first time you're watching this video, this is your first time you're watching any of our videos, thank you so much for clicking. And please, you're welcome to the M&A family. We actually would like you to help us help you by subscribing to our channel, like the video, and also comment in the comment box, in the comment section. Tell us what you'd like us to cover. Tell us if you're enjoying our content. Let us know how we can help you. Okay, so this is another supply and demand video. I'm sure I've seen you guys have been loving the videos for supply and demand, and I'm going to keep them coming until you guys get it. Okay, so today, as you can see from the title, I'm going to be talking about something very significant. Okay, very important in the trading industry. And what am I talking about? I'm talking about odd enhancers. First of all, we all know that forex trading or trading in general is a game of probability, right? It's a game of probability. Therefore, you don't hate to have more odds on your sides, right? And with the more odds you have on your side, the better the chances of that trade actually working out, right? So it's about probability, right? So you have to have more probability on your side for you to actually win that particular trade. So today I'm going to be looking at five odd enhancers. Five odd enhancers, and I kind of touched about them a little bit in the first video I did about supply and demand, but I want to talk about them specifically just on their own, right? So that you can understand and be able to identify these zones and be able to actually identify better zones that you can actually trade. So let's get started, guys. Let's get started. So the first odd enhancer. By odd enhancer, I mean something that makes that particular zone more likely to work than the other one. Okay, what is it that makes this particular zone more likely to work than the other one? All right, so what the first one is, as you can see, it's a move away from the zone, right? So you want to see price moving away from that zone with big candles, right? You want to see big bullish or bearish candles leaving a particular area. That alone tells you that there's presence of smart money where that move came from. So your job is only to go and identify where that move is coming from. So when you identify this area, you're going to actually realize that there will be a level of consolidation before this big move. There will be a level of consolidation before the big move, and this is what you're interested. Okay, you want to find that zone, and that's your zone. That's either your supply zone or your demand zone. How the price move away from the zone. So the strength of this move determines how much more likely that this one is going to work. Why am I saying this? It's because the smart money, they can't place all their orders at once. So once they place their order at that particular point, price has to come back later to that same level so that they can have more of their orders filled, and that's a chance for you to join them, right? So that you can also ride with them. So your job is to identify big moves, make sure that you have big moves coming from a certain level, and once you see that, then you have a good chance of price coming back to that level. So the bigger the candles leaving that level, the better. So you want to look at least for 1 to 3 candles, at least 2 to 3 big candles. Once you have such an area, make sure you mark that level. So you go back, if you're looking at supply zone, right? You go up and look for the consolidation. Look for that accumulation before the drop, right? Or that accumulation before the rally. So look for that particular accumulation. Once you find that, draw a level to the left side, to the right side, and wait for price to come to that level. So that's how it is. So that's the first one. So how do we score these? So You can score them out of two. I mean, two being the high, the strongest, and one being not so much strong, and zero being very weak. I mean, you shouldn't be taking trades from a zone that has got zero rating. Okay, make sure you only concentrate on those zones that have got a rating of at least two. Not You can't compromise on this one if you want to take high probability trades. Okay, we're going to look at the charts. Right now I'm just going to run you through the slides, and then we'll go to the charts and look at those same things we're talking about right now. Okay, so bear with me. So the next one is, how long did price stay at the zone? So you have to ask yourself, how long did price stay at this level? So the logic here is that the more price stays at that level, at the level of consolidation or at the base, the more orders get filled. The longer the price stays at the zone, the more orders get filled. And the more orders get filled, the less likely that price is going to come back to that particular level. You get that right? So the longer price stays at that level, the less likely that price is going to come back to that level. The lesser the time the price stays at that level, the more likely that price is going to come back to that same level. So how did you determine how long price how long price stays at this level? You actually look at the candlesticks. This is going to vary depending on what time frame you're looking at, but you basically want to have less than 6 candles at the base. Look at least for less than 6 candles at the base. So any zone that has got less than six candles, it's a good zone. Okay. If it has 2 or 3 candles, you can grade that as a two. If it has probably let's say 4 or 5, then that's probably a one. Okay. And you want to only focus on zones that actually give us what, a score of at least two. So that's how it is. So the longer price stays at the level, the more orders get filled, and the less likely price is likely to come back to that level. So you want to look for only for a level where price just stayed a little bit, few candles, then price drops or rallies. That's a good zone for you to trade. That's number two. Okay. The third one is risk to reward ratio. Risk to reward ratio is very, very important when it comes to trading, because it determines how much money you make, and also, yeah, basically it determines how much money you make. So you, in this particular one, you want to focus on a zone that offers you at least a 3 to 1. You want a zone that offers you a risk to reward ratio of 1 to 3 and above, nothing less. Because this supply and demand strategy actually usually has a bigger risk to reward ratio. You can even have 1 to 7, 1 to 10, only if you concentrate on finding good zones. So that's what you have to do. Make sure you look, screen through the charts, do the work, check for these zones. Check for these zones. Once you find these zones, mark them as your watch list. Wait for price to come to that level. Don't take premature trades. Wait until it shows you a sign. Okay? So that's how it is. Only focus on risk to reward ratio of 1 to 3 and more. So let's go. The okay, I think I missed another one. So the fourth one, this is supposed to be the fourth one. Okay, so the fourth one is overlapping zones. What do I mean by overlapping zones? So you want to find um zone areas, this either demand zone or supply zone, that has got uh, another supply zone on top of it, or another demand zone below it. So if a zone has got such zones below or above them, they actually act as protecting. They actually protect the other zone. So meaning the more likely, it's most likely to work. Okay. So you want to find a zone with another zone on top. Okay. Then price has to struggle for it to actually break through to the other side. So this one also is very important. Make sure it has a zone above it, or yeah, a supply zone or a demand zone above it. And if you have it, the better. Okay, so you also want to have make sure that this one has it. Then the fifth one, the fifth one I forgot to put here is the freshness of the freshness of the zone, which is the most actually the most important when it comes to supply and demand strategy, guys. Like this one, you cannot compromise. You cannot compromise on this one. Trust me. Okay, you make sure the zone that you're trading is a fresh one. What do I mean by a fresh zone? I want you to understand that a fresh zone is actually a zone that has not been tested before. This is a zone that is fresh and tapped. Okay, why should it be fresh? Because remember, the more times price comes to that level, the more orders get filled, right? So in instance, the more orders get filled, the less likely price is likely to work when it comes back that level again for the third time and the fourth time. Yes, the third time might work, it can work, but the likelihood of it working is less because we don't know how many orders are still remaining at that level, right? So you have to make sure that that zone is a fresh zone. Only concentrate on the fresh zone. Yes, third and fourth touches, they can work. I'm not disputing that one. They can work, but the likelihood of them working is less. They can work, you can trade them, but they are not very strong because they contain what? Less orders. The smart money guys, they can easily sacrifice those zones and price can just go through those zones, and then you start wondering why didn't this one work? It's because it's not a fresh zone. All right, so these are the five most important odd enhancers that will help you become a better supply and demand trader, because these overall they help you to choose better zones to trade from, and the better the zones that you find, the more likely those trades are going to be what, to be successful. Okay, so remember, we talked about the move away from the zone, the freshness of the zone, the risk to reward ratio being 1 to 3 and above, overlapping demand or supply. What's the other one? And how long price stay at that level. Please, I hope that is very clear. This one you cannot compromise on. Very important for you to actually, when you're starting to learn like to trade supply and demand, make sure you score yourself. Make sure you only have a zone, you only trade from a zone that gives you at least a score of 8 and above. 8 out of 10 is good enough. Or you can just concentrate on 10 out of 10. Remember, you score the maximum score for these odd enhancers is 2. So 2 times 5 give you 10. So make sure you actually just focus on those ones that give you nothing less than 8. So trade 8 to 10. Those will be very high probability zones, and you actually find that the chances of working are actually very high. So let's head back to some charts so that I show you what I mean by trading the right zones, right? So let's go. Let me show you some of the things some of the trades that I actually took and I'm still taking right now. So let's look at gold. Okay, let's look at gold. Those of you who are following me on Facebook and my 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 Telegram group, you realize that actually I shared these trades, and then those that actually took these trades have benefited a lot. Okay, it's actually moving, and I was actually able to pinpoint where the market was going to turn from, and I had some people saying no, it's crazy, the market is still bullish, it's less likely to go. I was like, you guys don't know what you're talking about. Okay, so let me start. So from here, what can you see? Where is the demand zone, where is the supply zone? So let me show you. I have a level here. So price was dropping, right? This was a big drop, and then on a higher time frame, all this level is it's a consolidation. As you can see, there are small candles like that.
So basically, this is more like a drop based drop, right? So what you do is identify your supply zone. And how do you draw a supply zone? From we've talked about this in the past videos. If you don't know, go and watch the videos that we just did, and you can actually learn more from that. So from here, I'll identify my zone, which is here, and I'll draw from the last bullish candle before the bearish move. Okay, I'll draw my level like that and extend it to the right. Okay, once you do that, just do what? Just make sure you label this. Label it as your supply zone. So this is my initial supply zone, right? This is where we had a big bullish move. Okay, this is a bullish move. I mean, sorry, a bearish move. Sorry. So what do you do from here? Again, I'll look to my left. So remember, the first question is how long did price stay at this level? So if you look here, you realize that price dropped like crazy. Okay, price dropped very hard, and that takes our what? Our first odd enhancer. It takes our first odd enhancer, which is the move away from the zone. Okay, sorry guys, just a minute. Sorry about that, guys. Someone was at the door and I had to get there. I'm really sorry about that. You forgive me about that one. So, as I was saying, so the first move, the first question is how long, how did price move away from this zone? So, price moved away from this zone with big bearish candles. Already, this tells you that this is what? A nice supply zone. Okay, so I'll mark that as my supply zone, and yeah, ticks my first odd enhancer, right? I give this one a score of what? 2. What's the next one? Is the next one is how long did price stay at this level? So how long did price stay at this level? I can just basically, before the drop, we had just 2 candles, right? We had like 2 candles. So I give that a 2. Then what's the third one? The third one is my risk to reward ratio. How much risk to reward ratio does this one give me? So it gives me from, like, if you look at this from here to the next demand zone, that's more than 1 to 3. Okay, from here to here, it's a lot. So that takes my other odd enhancer. So I have 3 of them tick, meaning I have 6. And then does this zone have overlapping zones? Do I have other zones above it? Okay, I have another zone just on top of it here, a quick rally base drop. So I have a zone here, and there was a nice base which was formed at that level. So I have what? I have another supply zone on top right there. Okay, I have a supply zone here. Nice. So 4 of them have been ticked. 4 of them have been ticked. So what's the other one? What's the fourth one? So we have a big move away from the zone. We have price staying not for a long time at that particular level. We have overlapping demand, overlapping demand, and yeah, the fifth one is freshness of the zone. So is this zone fresh or not? As you can see, this is a nice fresh zone.
Look, this zone has not been touched. Therefore, it's a what? It's a nice fresh zone and it's tradable. So this particular setup gives me a nice 10 out of 10 and it's very tradable. Okay, this one don't even hesitate. What you do is once you wait for price, you basically just wait for price to come to your level. Once price comes to that level, what do? You put your stop loss above that supply zone, and your target is probably your first target can be somewhere here. But where we had big moves coming from, it was from somewhere here. So probably it can be something like this or somewhere here. So you can hold on to this trade for as long as you want. And those that actually on my Facebook and my Telegram channel, they've benefited from this trade because it did just play out as analyzed. In a minute I'll show you the pre-analysis. Okay, as you can see, price is actually dropping from that level. It gave us a nice double bottom at that level. If you can see it, that's a double bottom, more like a double bottom at that level, and it kept on dropping. So let me show you. I analyzed this pair. God, where is God? Here. Let me see. Not this one. God before, it's this one here. Yeah, as you can see, I analyzed this pair and I wanted to sell when price comes where at this level, and it did come to this level and gave us what, a nice double bottom at that double top at that level, and it's now dropping. And those that are actually on those pages on those platforms actually benefited from this. So please, you can actually go and check it out. It's really cool. You can actually be sharing. I share a lot of setups, and yeah, it's very important for you to actually be there so that you can benefit from those trades. So that's one example, right? You might say, no, maybe it's just one example. Let me show you more, right? Let me show you more examples of me doing this and actually these trades working out. Okay, I took this trade AUD USD. I took this trade AUD USD. Let me show you. So let me go to my 4-hour time frame. I just do the analysis together with you so that I'll show you again the chart that I actually how I took this trade. So let me just do this. So remember, you want to look for those big candles. Okay. So if you check at this level, look, price moved at this level from this moved like this, but a very big move to the upside, and but the price immediately it was rejected. Okay. So how do we draw our level there? Remember, we draw it from the last bullish candle before the bearish move. So you draw like this and extend your level to the right, and that's what there's a supply level there. You can do well to label this, they will help you. Okay, so that's the supply level there. And what do? I just extend it to the right side and wait for price to come. So how did price move away from this level? It moved away from this level with the candles were not very big, but they were enough. Okay, so we had like 1 2 3. So to be fair, I can probably give this one a 1. Okay, because we didn't really have big candles like these ones here. So let's say we give it a 1. Okay, how long did price stay at this level? It stayed for a very short time. We had only 2 candles at that level, then price started dropping. So that's a 2, right? It ticks. So we have the 3. That's how long. Then do we have overlapping supply at this level? Do we have supply on top of supply? Do we have? Yes, we do. Look, we had the supply zone right above it. Okay, we had another one just above it. Look, we had another one here. So it had multiple what? Multiple supply zones. So this was a high probability trade. And what do? That's the so multiple supply zones. Big bearish move out of the zone. Short period of time, price spend short period of time at that level, and also the fifth one is, did price, how is this level a fresh zone? How fresh is this zone? This level was untouched, so it was a fresh zone. Therefore, it's good for what? For a sell. Meaning we have the score of what? 9 out of 10, which is tells us it's a good trade. So what do? You just wait for price, you go to the lower time frame and wait for price to come to that level. And this trade went nicely. And of course, the other one is, does it give us a 3-to-1, a risk to reward ratio of 3-to-1? Yes, it does. Yes, it does give us a 3-to-1, because just from here to there, it's more than 3-to-1. So how do you trade this? You just wait for price to come back to that level. And once price comes to that level, what do you do? What do? You look for your confirmation. And here we actually had a head and shoulder pattern formation at this level here. Very small head and shoulder pattern. If you can see, we had like this. This is a left shoulder. We had a right shoulder there, and then we had the what? I mean, a right shoulder there, like that. You had a nice confirmation here, which is a reversal pattern. We had a nice reversal pattern forming at that level. So that's your confirmation to sell. And what do? Make sure your stop loss is above what? Above the supply zone, like that. And if you just held, you guys, if you held this trade, you would have gotten yourself a 1-to-8, you guys. Like, it's still dropping. Even right now, as I'm talking, it's still dropping. It's still dropping, you guys. Like, this was going to be a very, very beautiful trade only if you stayed in this trade. Okay, so it was very nice trade. So am I just talking about this? I'm not just talking about this. Let me show you exactly that I actually took this trade and it worked. Yes, it worked, and you guys would have benefited if you were on my Facebook and my Telegram channel. Okay, so for those that actually want to learn, we do offer mentorship. For those that want signals, not just signals, I mean setups with analysis and reasoning behind why you're taking that particular trade, we do offer those. Please do uh, follow us on Facebook, and also please join my Telegram channel so that if you are serious about it, we can actually mentor you, can teach you so that you can also be able to identify these levels. So this is how it is. This is the same. Look, as you've seen it, it's exactly like this. This was the before the trade. Okay, and price was testing this. We had multiple supply zones, and price was at this level and dropped. And this is the same chart. I'm just from showing you guys, like, this is the same chart. So this chart was at on the 1 hour. Maybe you can see it better on the 1 hour time frame. This is the same chart you are seeing right now, and price dropped like crazy. Okay, and price has dropped like crazy, just like that. Just by identifying a level and then waiting for price to come back to that level and then take that trade. Simple as that. You'd have taken all this, you'd have gotten all this meat just by simply waiting for price to come to that level. Okay, so that's how it is. So let me look for another, for example, for demand. Let me see if I can find one. This week there was so much of bearish structure and like bullish ones, so it will actually be kind of difficult for me to find one. Let me see. USD Swiss, USD Swiss, we had the setup. Yeah, we had the setup there, though it didn't quite come to our level, but it kind of started going up. So this is how it is. Okay, the first thing is you identify your zone. How do you identify your zone? We've talked about this in the previous videos. Please go watch those videos. Please watch all the supply and demand videos I've just done. They are very important. They contain so much knowledge. Okay, you can actually can change your trading your trading journal just like that. Okay, watch those videos. Make sure you demonstrate and back test this strategy before you starting to use it. Okay, it's very effective, but if you don't know what you're doing, you end up losing your money. So what did we have here? So we had price coming from this level with so much momentum, then from here it gave us a base, then it started going up. So sometimes it's very important for you to actually draw your base from the first consolidation after an up move, or the first consolidation after the down move. So what happened here? Price went crazy to the upside and then consolidated. Okay, for me that's the level. So we had some consolidation at this level, and what does it? What do we do next? How did price leave this level? First question, how did price leave this level? Bullish, nice bullish big candles. It gives us a 2. Okay. Then how long did price stay at this level? So price kind of stayed a little bit longer here. So we had a little bit of more candles at this level. So probably can just give us, maybe let's give it a 1. Then what's the other one? Do we have multiple demand zones below this demand? Okay, just zoom out and look to your left. Do you have more demand zones? We have a demand zone just below here. Okay, I have a demand zone just right below here, right below here. So it qualifies. What else? What else? What other things? What other things? So we have multiple demand zones. We have a big move out of the candle. We have a little bit more candles at this level. Does it give us a risk reward ratio of 1 to 3? Yes, it does. Look at this. If price can come to this level, if price can go up that level, that will be a 1 to 7. Very nice risk to reward ratio. Okay, nice. Is this zone a fresh zone? Yes, it is a fresh zone. Why? It has not been touched. This zone is a fresh zone because it hasn't been touched. Therefore, it's a nice, fresh zone. And beautifully, as price was coming to this level, it gave us a nice double bottom, which is a confirmation. Though I hesitated because it was not really at this level. So you have to wait for price to actually come to your level. Price has to come to this level because at this same level, this is where the orders are. Okay, so that's how it is. Like you have to make sure price comes back that level. Don't take trades blindly just because you know it's a demand zone or a supply zone. Always wait for confirmation. Guys, I can't thank you enough. Thank you so much for watching. I know you if you have any questions, if you have any questions pertaining supply and demand, please don't hesitate to put them in the comment section. Make sure you like our Facebook page, follow us on Instagram as well. Make sure you also join our Telegram channel. Please, guys, this is very important, and you learn once you've mastered this strategy, you take much more wins. Okay, you guys, thank you so much for watching. Please subscribe, like the video. Please like the video, subscribe, and also leave that comment in the comment section. Thank you so much for watching, and until next time, I'm out.